What I'm showing this year is two really quite different models which are models that I can update on a regular basis, which makes them more topical. The other thing that makes them interesting is that they're very, very good models, have a high explanatory power. One of those is the new model of GDP, which we saw in previous weeks based on hours worked. And the other one is the oil price model, which I showed for the first time in the quarterly presentation in December. The advantage of this model is that it's both simpler and more accurate. The simplification is that there are only two variables in both of the model for West Texas and the model for Brent. And in both cases, it's the level of US stocks, in which the information is provided weekly by the Energy Information Authority. And the publication lag is much, much shorter for that than the whole of world data I'd been previously using from the International Energy Authority. And the other variable in that is the US dollar index. And in both cases, this explains better than 80% of monthly variation in both of the variables. And if you look at and in theory, what the model should do is they should lead the oil price by about a quarter. And if you actually look at the models that were in the quarterly presentation, which were run at the end of November, here we are 3 months later. And the market has done pretty much exactly what the model suggested, and that it's moved up a little bit. So what I'll do is I'll do a write-up of the model, but in the write-up of the model, the next write-up of the model I do, it won't emphasise currency as I have in previous presentations, but I'll just talk about stocks, and I'll talk about what's actually been happening in US oil stocks, by which I mean the carryover stocks or week-ending stocks of commercial oil, which is used for feedstock by US refineries. There was a terrific build in stocks last year. Stocks went from 422 million barrels in September the previous year to 533 million barrels in June in 2020. And what's really surprising about that is that that's not the peak, that's not the multi-year peak of stocks. Stock peak levels was back in March 17. So whereas stocks got to 533.5 million barrels last year, they'd got to 535.5 back in March 17. So even though it was bad, it wasn't anywhere near as bad as it appeared, it felt like at the time. And since that, what's happened? Well, in the model, what we wanted to happen was the US dollar to go down, and we wanted stock to go down. And the US dollar has gone down a bit, and stocks have gone down a bit. And so the model is showing at the beginning of a significant recovery in the oil price. As a matter of fact, when you actually look at the chart in the piece, it's a pretty sharp little jump. Where we've been, this area that we've been playing in of relatively high stocks of oil in the US, but since 17, is way higher than where we started back in the beginning of last decade. Back in 2011, we were running average stock levels between 318 million barrels and 350 million barrels year on year for the pretty much first 4 years of the decade. And so what I actually think is by the time we get to the end of the cycle, the US dollar, because of the enormous expansion of the US budget deficit, will be down to the lowest levels that it was at the beginning of last decade. And also US stocks will be, that means the combination of those two will take the oil price to be much, much higher than it currently is. But what's happened over the last month is that oil stocks have peaked in the US. They've fallen from 533 million barrels to 476 million barrels. That moves up our model. Our model is currently saying that West Texas Intermediate grade should be trading at $56.35, which was about $5 higher than when I did the model 2 days ago. And it's also telling us that Brent should be trading at about $60.40 a barrel, which is also about $5 higher than when I did the model 2 years ago. So what we should see is a continuation of this uptrend in oil, and in 3 months' time we can generally expect both Brent and West Texas as be trading $5 higher than they are right now.